morning, everybody. This is Fred Meissner with the weekly technical market call for April 12th, 2012. This is the first time we've done a pre-recorded conference call, and we appreciate everyone bearing with us on this. My travel schedule does not permit me to do it otherwise. First of all, let's start in with talking about the stock market. The S&P correction has likely started as we've been expecting, and we continue to look for the SPY to move down to the 134 to 132 area by early May. Then we think a summer rally can ensue. Obviously, we got down to the 135 area already, so we should see some choppiness and some rally attempts, and then another move down at the end of the month, and that should get us into position for that summer rally. One of the reasons we're looking for early May is that sentiment indicators still can come down a little bit, and also we need a little bit more time for the weekly indicators to come down. Assuming that happens, though, sentiment indicators should continue to come down on the rally, and we should be in position to get a decent, really good short sale signal in July or August, or at least a signal for most of our long-only investors to start to raise cash. The summer rally should probably benefit small to mid-cap stocks, so when we get this buy signal, we're going to be looking to take advantage of that by buying some of the small and mid-cap stocks that we would normally look at. IJR is one. MDY would be another, and the RAFI 1500 from PowerShares, it's a combination of those two, would be another way to go. We'll alert you, obviously, in writing and on a real live conference call before that happens. What would tell us we're wrong about this would be a move below 130 on the SPY or a move above 143 on SPY, suggesting that the uptrend was going to continue. Right now, those things seem like they're on track. The bond market bounced as expected, with the TLT bouncing towards the 116, 117 area, but this market still looks weak overall, and other instruments look stronger. We've talked about LQD, which looks very positive, even on a pullback, as it's still in an uptrend, whereas LQD is in a sideways trend. And, of course, we've mentioned preferreds. We want everyone to take a look at preferred charts like PGX and realize that the preferred stocks are not coming down nearly as much, even when Treasury bills are up. High yield also looks good. We like PHB, HYG for more speculative people, and but this looks like the biggest problem we're going to be facing over the next few years is what we're going to do about fixed income as money comes out of stocks. We'll have some ideas on that as time goes by. But right now you want to be adding a few preferred stocks to your portfolios and segueing out of treasuries and out of open-end bond funds. In terms of the gold market, gold looks like it has bottomed. As long as it's greater than 150, it still looks like a bottom, and as long as it is greater than 156, the weekly head and shoulders pattern is still operative, and 184 is the target for the year. We're still expecting this to occur. We think it looks pretty good. In conclusion, before we do the stocks that have been sent in, and we're going to do those in just a second, what I would say is we don't see any substantial change in opinions this week from what we said last week and what we said in this week's weekly reports. Investors should still be in this market. Traders may want to wait. We're holding on to some cash we raised earlier when the market was around 140 on the spider. We're going to look to redeploy that cash in early May, and we'll see how that goes. Obviously, forecasting in time is a little more difficult than forecasting in price, but it seems to me that that's the way we should take a look at this thing. Now we're going to take a look at some of the stocks that have been sent in. The first stock is Apache APA. This stock does look down. It looks like we should see a little bit more correction, possibly to 87.50 on the short-term chart. We're looking at the intermediate-term chart. 87.50 looks decent as support. A couple more weeks down here, and we should see the weekly stochastic start to come down. UA, Under Armour, still a good-looking weekly chart, but could test 88 to 90 as part of a correction, but this is the name you want to be in. ULTA is an interesting name as well. Up a bit, looking to a little bit tired with overbought stochastics. I would say that if this stock were to penetrate 90, you could get a drop to 82 to 84. So with 93.70, you might want to have a stop at 89.90 if you're aggressive. Look to buy this stock at 77 to 80 if we get a chance to do that. Ford has been an interesting name here. It looks like it tried to build a cup of handle on the weekly chart and is failing. Much below 1150, targets 990 to 10. The weekly stochastic is coming down, and this one again may do the Richard Pryor routine and start to go sideways here, base a little bit, and then catch on fire. The MIDD chart is one of those ones that is also looking a little bit toppy here. The stochastic rallied up towards 80 and has failed. There's layers of support between 90 and 85. The stock could come down there. NOV, Nancy Oscar Victor. The same sort of thing. The stochastic's down in the 50 area. Again, this is an oil. A break of 76, target 70. That would not be a surprise. Oil does bottom late April, early May. We're starting to see some signs that may occur. ExxonMobil is coming down. 78 looks reasonable on that. And CVX is also coming down a bit. I'd like to see Chevron at 92 to 96. We would be buying those stocks at that time. ETN, Eaton Corp, looks weak. Stochastic is down. A test of the 4250 area would be reasonable. Again, if that doesn't bother you, I'd hold on to the stock, but that looks where that one's going to go. ESRX. Up to resistance in the 57.50 to 58 area, and it's come back a little bit, but there's layers of support between 55 and 53. The stochastic is overbought, but this looks pretty decent. We'd hold on to it. Qualcomm looks like it's trying to make a long-term breakout here as long as it stays above 60, and assuming that is the case, a test of 90 would be reasonable, but some pullback in this correction to 63 certainly would not be out of the question. UNH is one of the stocks we like in healthcare. Once again, a couple of weeks ago, we hit new highs, trading around 60. As long as the stock stays above 57 to 54, it looks fine intermediate term, and we continue to like healthcare at least into June when that Obamacare ruling comes out from the Supreme Court. That may very well turn into a sell on the news situation. We will be alert to that and advise you accordingly. PM, Philip Morris. That stock has been smoking lately, but a test of 84 is not out of the question. Major support at 80 to 82, and again, I'm not a big fan of the tobacco stocks, but this could be still okay. MDCO, right on support in the 20 area. Break at 20 implies 18. The stochastic is down. We'd like to see this go sideways and maybe get a little bit more corrective activity. MPEL, currently 1360 to 14. A lot of resistance, 15.5 to 16, but the stock looks like it can try to get up there. Major support at 12. Caterpillar, CAT. That's coming down rather neatly and looks like it could test the 90 area before this is over as a correction, but a bounce to 105 is reasonable to 110. Overall, though, we'd like to wait on this stock and see if we can get it around 94. Gold, we already spoke about, and there's no change in our commentary. It's trading pretty well. I will mention still, though, that we like the way silver is trading, i.e. much weaker than gold. That looks positive to us. PBA, Paul Boy Apple. That stock is too new to really give a good technical read on. I would say that if this stock breaks down below 28.75, you've got a $15 name, and I wouldn't want to be involved in the stock. PAGG, by the way, is the agricultural stocks, And, DBA was what we wanted. PAGG is agricultural stocks. It's holding 27.28 support. DBA, the agricultural commodities, we still think they can get down to 27. We've been waiting for that. They're bottoming a little bit later seasonally. They look like they're holding 27.50. We're still interested in that area of the market. We'll just have to see how that works, but 27 is reasonable, and we're only 50 cents away. If you're not in that, it might be a good time to buy it now. XBI, which is biotechs, coming down. A break of 74 implies 68 on that, and otherwise we're not as interested in that as we are as the big pharma stocks like Merck. We haven't been asked about Merck, but we'll give it anyway. Merck is sideways. It's broken a small downtrend line, and it's holding up and looks like 39 to 41, and more importantly, looks better than most of the biotech stocks. SLXP, that stock has turned around and started to come down much below 46. Would be a problem and suggest 42. We don't really have a huge feeling on that stock intermediate term, except that much below 42 to 45 would be a real problem for the name. But so far, so good. OXM is also coming down. Your major support's the 42, 43 area. Should that fail, a test of 36 is reasonable, and the stochastic looks like it can come down some more. It's not in the buy area. And PSCE, which is small cap energy, again, small caps could do worse than big caps. The stochastic is down at 30. A move down to 32 on this would not be out of the question. Would actually be, I think, pretty appealing. It still looks a little bit worse in some respects than XLE, but not much. And actually, in very recent days, there's a little bit of relative outperformance on the part of PSCE. That's an area we would definitely look at in early May if the market comes down. With that, we've covered all the stock questions that we've had, and we're going to end the call. I will say that anyone who has any individual stock questions, please feel free to email me. We're also going to send a little bit more info on this call. But if I've missed anything, please feel free to email me. I will be back in Atlanta Thursday night and able to look at some charts at that time. Thank you and have a good day.